Hello everybody, you've reached the Max Convexity channel. My name's Max, my little dog's name is Jax. We're going to talk tonight about these Defiance funds, story of my life. We're going to talk about profit boxes. We're going to talk about the retire on dividend video from today. He asked me to look into some stuff and I'm going to cover that. I have a viewer, maybe we'll talk about a comment. And we're going to talk about ISPY and a bunch of different things. We're going to talk about intrinsic versus extrinsic capture, and we might even have another mini profit box lesson. All right, so this is, I guess I'll start calling this show Late Night with Max and Jax. I might do it as a live stream. It might be fun. I don't know if anyone will be up at this time. I'm the kind of guy that's a night owl, and I get my I get my best creative energy and stuff from 10 to probably 2. All right, 10 to 2 in the evening. Let's see what's going on here. So I just put the tabs from left to right so I could remember, or I want to talk, I'm going to talk about this tab first, then we're going to go across the tabs, and hopefully I don't miss anything. That way it also saves me from having to write a script out. Makes it easier to do these. I really had fun doing that half-hour talk last night, and I felt a lot of people got some stuff out of it, and I really enjoyed showing everybody how the spreadsheets and the profit boxes work. All right, so let's talk about ISPY. The reason I want to talk about it, well, there's a couple reasons. First, let's talk about the Retire on Dividend video. He did a follow-up video to his first ISPY video, and I don't get the idea he's real high on this fund, and I'm not real high on this fund either. It's not a big surprise. We agree on most stuff, but, or I agree with about 90% of what he says. I found some stuff interesting in this. All right, so what Retire on Dividends found is when he looked at this, he found a line somewhere in the prospectus that just flat out said we don't trade options, and they use swaps to gain exposure to single day or 0 day, short calls. They do it through a swap, and then they mentioned an index, something called the daily covered call index, which is a real thing. And then Retire on Dividends was thinking, well, heck, these guys are just buying the index, and it did make it sound like that, but I don't believe that's what they're doing. But I'm still not crazy about this fund at all. The index, I think, is just their benchmark. I don't think you can directly invest in it. In fact, I'm pretty sure. I went pretty deep on the index today. They use the index as a way to measure how much they should have made or should have lost. So when they're making their transactions with, I think Goldman Sachs is on the other side of this transaction. Retire on Dividends, in his video, it showed a Goldman Sachs swap. See, this is showing 99% in their holdings. It shows 99% Goldman Sachs swap, but it's a covered call index. So that right there, I think, is where they get the covered call exposure from. Okay, but I thought I was a smart guy and stuff, but I don't understand. So I used to trade futures quite a bit. I wasn't any good at it. They're hard to trade. I like options better. Futures, and I need to define futures. That's something we're going to do when we get to the spreadsheet part of the update. I have no idea what that means. So really I have no idea. I know what a future is. I know how it works. I have no idea how that would fit into the strategy. It looks like they have 5 contracts over here. That's not a lot of contracts. So I don't even know. I wish somebody could get these ISPY people on, on a podcast or something. Here's what I did find that was interesting, though. If you go down just a little bit further, it says option position. And then it says type, S&P 500 index call. And then it describes what the call is and what the level is. And it describes a little bit of the methodology. But right here, it shows for tomorrow, 12/22/2023, that they have a strike price of $47.65. Okay, and it's showing a moneyness of 100.38%. So that's 3.8% out of the money, which is actually great. This fund would be great for appreciation. If they really are doing the 47.65, and I don't think they're literally doing it. I think they are using the index, but I think that the people at the fund are putting up the synthetic or whatever the index is invested in synthetically through this swap. And so if they're this far out on this 47.65, look at this. I have different ways of showing this. Well, first, let's look at the best fund in the world, or the best fund, company in the world, Defiance. I just am in love with the way they do their stuff. They have the same fund, except it does single or 0-day puts. But like we discussed a million times, in the money naked put is identical in most respects, and about 99% of the ways you can look at it, to an out of the money covered call program. So let's look at the spreadsheet, and I've already updated the numbers tonight. So you aren't going to have to sit through and update the numbers with me like last night. We'll draw a few profit boxes. These guys, though, I just looked at the intraday trades, and I looked at yesterday's trade. They let yesterday's trade expire, so that we didn't have to pay anything to buy that option back. But today they used the 47.55. Well, heck, the 47.55. Let's look over here at good old Tasty Trade. I was looking at Tesla. We're going to talk about Tesla a little bit later. Let's look at this old NDX. All right, so let's look at the 0-day options, or the ones that expire the 22nd. Okay, so, oh, I'm sorry. We're on SPX. My bad. All right, so let's look at the single-day SPX, the December 22nd SPX. Okay, we sold the 47.55s. The JEPY did. So those would be, 47, I'm sorry, puts are on the right side, of course. We sold the 47.55. It closed at 1970, well, it's trading at 1960 now. I guess these things trade all night. I'd forgot about that, but these options do trade at night. I don't think they're very liquid. That stuff doesn't matter. Look over here to the Delta. The Delta 67. So that's the general program of what this fund does. The equivalent, if you're doing a covered call, the equivalent delta to a 67 or 68 would just be on the other side of the graph. It'd be a 32. It's just the inverse of the number. So a covered call program that was going for the same, type of risk and reward, and the same type of capture, and the same risk reward profile would use this option right here. They would sell this call for us. They would sell this call right here. That would be the equivalent of selling this put naked, or having a synthetic and selling this call, or owning the stock and selling this call. That'd be identical. Okay, these guys, though, are doing the 47.65 according to that prospectus. And like I say, I realize they aren't really doing it, because they say they're doing it synthetically, but then at the same time, they show you what they're doing. So the good news is that gives us a little clue. So look, this one, the call they did is only selling for about half of the one that JEPY did. So that's where they derive the income. So instead of making 50%, like JEPY probably will average, I'd say 45 to 60 is a good range for JEPY. That just a guesstimate. So this one, I would say a good range would be 22.5 to 30. But just by the same, using the same math, other things being equal and stuff, if they're going that far out. However, this fund will probably have a lot more capital appreciation. I mean, or it will, just by definition, because they aren't chopping off as much of their upside. So it's kind of a good news, bad news. But the bottom line on this damn ISPY is I don't like that we can't track it. There's no way to audit them, or we aren't really auditing them, but there's no way to cheerlead, and it's not transparent. It's not power to the people. So I had a couple of comments. I wanted to try to find them. I don't guess it's a big deal, but one of my comments said, hey, I had 2 or 3 comments, can you track ISPY? So no, I really can't, unless they start publishing their trades. But even if they publish their trades, I don't have a way to look up the swap prices and stuff. I mean, I guess I could track the strike they give us, that little phony synthetic strike. I don't think that's real. I don't think they really sold that option, but I guess I could just, if they're going to keep posting what option they're synthetically short, I guess I could, but I don't know. I'm not that excited about ISPY, to tell you the truth. So right now, that's probably no one being able to track it. And not that I wouldn't want to, and not that I'm not pulling for you guys, And not that this fund is dog shit or anything. It might be a great fund. Excuse my language. It may be a great fund because it may give you enough income, even selling that far out of the money, and that may be enough income for a lot of people, and a lot of people may like the extra upside. So I'm not dogging on it. I'm just that's just my feelings on it, and that's what I found out after I watched the Retire on Dividends video. He just asked me in his video just to take a look at it and see what I thought. So that's what I think these rascals are doing. So, like I say, I'm not throwing shade at the fund. Let's talk about some other stuff. Let's see, what do we need to talk about next? Let's see, my Discord. Okay, I wanted to talk about, I found something interesting in the Tasty Trade option tables, and it's regarding Tesla, and it's also regarding the NDX. So let's pull up the NDX first. I may have showed you guys this before because I'm really big into this. And what I'm really big into is the fact that it's a smart money play to do puts on an index. Puts are always overpriced. I've heard that my whole life. I read an article today with the hedge fund guy that was saying puts are overpriced, particularly on indexes. So the smarter money's on the puts, on selling puts, as opposed to doing the equivalent covered call strategy. So so when it comes to NDX, I think it's way better to do the put strategy, and I'm going to try to prove it to you. So the yellow line is the in the money line. So the first line is 1 standard deviation away. So this is 1 standard deviation down, and then there's a blue line up here that's 1 standard deviation up. Please don't ask me to define a standard deviation. I know what it is but I don't know the formula for it. But it's a measure of volatility, and it's a measure of the kind of the daily average move, kind of the move that you could expect most of the time. Most people say that like I think 90% of the occurrences occur between, or 94%, or there's some number occur between the first standard deviation each way. So it's just kind of like a little limit on the both ways. But it's also a way to compare how much the out of the money options cost and to compare the different premiums. Well, look, so we're on NDX. So 1 standard deviation up, those calls are going for 13 bucks. Okay. 1 standard deviation down, those puts are going for 16 bucks. I mean, 3 bucks when you're only talking, that's like, what is that? That's 25% difference, 20% difference. It's a pretty big difference. So that right there is why a person could do a covered call program on the NDX, but you're going to be selling the thing that's not as expensive. You want to sell the puts, in my opinion. Puts are, and I just use the 1 standard deviation out of the money to show you because that's where the most drastic difference is. That's easy to look at, but it exists on all of the puts and the calls. The money ones, they're just priced richer on the put side. So so that's another thing I don't like about ISPY. What the hell are they doing with the call strategy? I don't know. I'm just going to have to reserve. We're going to have to see a few months worth of results. It may be the greatest thing ever what they're doing. So I don't want someone to find this video and play it back for me. But that right there, you can just see there's like 20% more premium selling out of the money puts or selling puts. In that case, they were out of the money. But now let's look. What does make a lot of sense to me is individual stocks. And I haven't looked this up prior. I hope this example proves my point. But let's look at Tesla, and let's go to the options for tomorrow. Well, let's go to the options for next Friday. Tomorrow's only 1 day away. Okay, and let's go 1 standard deviation out. Their puts are $1.18. The equivalent call is $1.64. So yes. That's a big difference. 50 cents when you're only talking on a price. That's like a 33% difference, or 25 depending on which one you use to determine the ratio. But that's a big difference. So that is why these synthetic covered call programs are such big winners on these single stocks. Now, I don't like the single stocks for a lot of reasons. I think it's better just to get QQQY, because QQQY has like 8% of that index is Tesla, or some large number. And there's also a lot of NVIDIA and a lot of Coney. So you can get exposure to a lot of these stocks, but without having the single stock risk, just by doing the index, by doing the index strategy. But mathematically, I can see the attraction to doing a covered call strategy on single stocks like Tesla and Nvidia because they're price rich. I haven't checked Nvidia out beforehand either, and we'll look at Coinbase, but I bet you these calls are super rich compared to their puts, compared to equivalent puts. So we'll go to, what's that about? We'll go to Nvidia, and we'll go to next Friday. We'll go one standard deviation down, it's $1.86. Standard deviation up, it's $2.56. So yes, these are big winners. You have a big edge selling calls on individual stocks, especially high-flying stocks that go up all the time. There's a lot of demand for the calls. There's more demand for the calls. The reason that the puts on the indexes are such winners is this is what I'm told. I've never worked for a bank or anything, but the banks and institutions use the puts to hedge and to hedge downside out, and so that's why those trade rich. So, but the reason calls on these individual stocks trade rich is because retail loves call options and loves to bet on these high-flying stocks. I bet Coinbase is rich as heck too on the calls versus the puts. But let's check here. All right, so a Coinbase put is trading for $1.45, one standard deviation down, one standard deviation up. It's $2.18. So that's like, what is that? That's like 55 cents plus 18. What's that? 65, 75, 72 cents. 72 cents, and you're just going on a base of we'll use the higher number of $2. That's like 40% or 35% difference. That's gigantic. And that's the thing that YieldMax is doing a very good job at, is monetizing these expensive calls. And so I like the theory. I like that I like what they're doing. And if I've already talked about that or explained it, I just wanted to show it again with the actual option tables. All right, let's see what else I got to get off my chest. These nightly little things have become fun. I was knee deep in these benchmark land today. These are these buy right indexes. This is what when I was doing research for what Retire on Dividends asked me to do. I was trying to find more information on this daily covered call. But anyway, so I ended up spending about 2 hours looking at these other cool strategy indexes they have and how well they work, and I'm just in love with this kind of strategy and this kind of information. Okay, let me go through my tabs real quick and see. Well, this right here is a white paper, and this person, Catherine Shalin, this paper, if you read it, she's saying the same thing I just said. She's saying puts trade expensive, and she gives some more sophisticated reasons than I did, but basically puts trade expensive. All right. Okay, more buy right stuff, more ISPY stuff. I just want to make sure I covered everything. I got you guys here. We're going to look at the stock index futures, and we're going to see how the funds are doing overnight and all that kind of good stuff. Here's the index. Here's the covered call, the daily covered call index. Okay, and I wanted to answer another question. This index only goes back to July of 2022, and Retire on Dividends mentioned something like that. And then it also mentions that it actually started in October of this year. Well, they're both true. In October of this year, they started tracking this index live. It wasn't based on back data, but they went back to July of last year so they could give you a one-year chart of what the return looked like. So between July of last year and October of this year, it was a simulated return. And from October of this year, it was actual numbers. And then starting just 2 days ago, as far as I know, the iShares company, ISPY, is the first one to use this index for their ETF. When I was Googling it, I think there might be an ETF in Brazil, of all places, that uses this also. I can't prove it, though. It's either Brazil or India. And anyway, that's another story. That's another rabbit hole I went down that I'll try to find more information out on that before I shoot my mouth off. But here's the year-to-date performance, or here's the all-time performance of this daily covered call index. And I like it. There's nothing wrong with it. I mean, I looked at this compared to the market, and like I think it was from this summer to the October low was 10% in the indexes, 10.5% or something, and it was only 8.5% here. So this is about 20% less volatile, just like we'd expect. Same thing with QQQY. They don't get all the downside, not even close. They get about a fraction of it. You know, and that right there is why these funds don't decay, and I'm always so insistent about them not decaying. To truly decay and erode and go to zero, you know, like UVXY does or something, they would have to get more downside. That's how that happens. These funds do get tracking error, but they get it on the upside is what actually causes the tracking error. They have positive tracking error and down moves. So that's reason number 1 million these things don't do what a lot of people, you know, are just insisting they're going to do. I saw a comment the other day and somebody was asking, it may have been in somebody else, one of somebody else's subscriber. I was looking maybe at another video, but somebody said, well, I just need these funds to be around 3 years till I retire. Do you think they'll make it 3 years before they go out of business? I just, you know, but when you hear so much BS on the internet all day and, you know, that's all you hear is these things are a scam. You don't hear it as much anymore now that retire on dividends, Rob stuff, Mike, the tactical stock scalper, and there's a bunch of other ones too. A bunch of other influencers have got on have figured out how these work and are spreading the good news. But you know, it's just combating the misinformation. But anyway, so this daily covered call index itself looks cool. Oh, here's what I was going to show everyone. This where it says LD, that's the launch date. That's the day it went live, and they weren't back testing it. The theory is when they just make up an index and tell you what it was, the problem is that people are afraid they might change the parameters to curve fit it to make it work a little better. They can't do that once it's a launch date. In their white paper, they swear they weren't doing that, and they explain their methodology, but still, that's why you can take the data more seriously after it's live. And then you can take it really serious after a fund's actually trading it. Because, like I say, I'm 99% sure this is not directly, they can't directly invest in this. It's just a benchmark. They aren't just investing. It's more complicated than that. But they are using this as a method of keeping scores with them and Goldman Sachs. So that's the way I think they're doing it on the swaps. But like I say, the most interesting thing that I found was which option they're supposedly selling. That's way out of the money. That could be good news. You know, say you get a 20% dividend. Say it's 15, that's still huge. But say you get way more upside than some of these other funds will get. I mean, you know, that could definitely have a place in someone's portfolio. I just wish it was more transparent. Power to the people. That's what Jay did for us. I mentioned in one of my early videos, I think that's what defiance means. It means, heck, we're defiant. We're pissed off. We've been, you know, the little guys missed out on the fun for too long. They've had us sitting over at the kids' table, you know, for too long. Unless you had $5 million, I think that's what you have to become to be an accredited investor. And there's a lot of people on YouTube that have that much money. That Ethan obviously does, and there's a lot of other very successful influencers. But for guys that you know are trying to retire and trying to retire early, like retire on dividend, we aren't going to be accredited investors. We don't have 5 million. Probably will never have 5 million. So in the old days, you had to have 5 million before they'd even talk to you. I've also heard that number's 1 million, but in any event, it's a lot of money. That doesn't mean you're worth $1 million, including your house. That means you have, when a financial planner wants to talk with you, he wants you to have $1 million, you know, or 5 million or whatever it is, liquid, free and clear. Like I say, and I'm sure Mr. Gallstead has that, and a lot of other people. I'm not knocking it, but this is letting people that just work every day for a living get the hedge fund type results, and that's the thing that's one of the things I'm most excited about. And the second thing I'm most excited about is teaching everyone options. Options are a great thing to learn, even if you don't want to trade them. It's just a great thing to learn. It's my favorite financial instrument. So they're so much better than bonds. Oh my gosh. Back in the day, all there was stocks and bonds. They had options, but you had to trade them yourself. There wasn't option strategy ETFs back in the 90s when I was in wealth management. I would have had my customers in these funds so fast. Oh my gosh. All right, let's talk spreadsheets, and I'll try to let you guys go. Well, let's look at the stock market here. Let's look overseas. I always say overseas because this is trading in Japan. Japan opens first, and then China, and then Europe opens, I think, at 2 o'clock in the morning. But anyway, okay, upper left corner, right here, NASDAQ down a quarter point, ES down a little bit, Russell down 33 basis points. That's nothing. Let's just take all right. Let's take a look at these. Sorry about that. I kind of like this little late night show. All right, so there we have it. So the market, this bar right here was the 2 o'clock bar. That's the 2:30 bar. That's the close, or the close is right here, I guess. Well, I can think the close is right here. Anyway, so we closed at 16,954 and we pulled back to 911. Graphically, if you want to look at it, we've pulled back a little bit less than half of today's range. So we'll see. It's not a great night. I'd rather it be shooting straight up, but it's fine. It's just churning or chopping or whatever you want to call it. Same story with the ES. If you look at the ES comparatively, it hasn't lost as much of its daily range. It's only pulled back, I'd say, 20% of its daily range. And then Russell's pulled back, I'd say, a third of its daily range. So we'll see. I'll come back on in the morning and we'll see how we open. All right, so let's see what else we had to take care of. All right, spreadsheets, my favorite topic. Not really. I love them, but I have a love-hate relationship with them. But it's more fun now that I can share them with you. And I like that I showed everyone how I do the profit boxes, and I had a really good reception on that. Okay, so the first thing I want to talk about, two things. Let's get the bad stuff out of there. Let's get the bad news out of the way first. All right. I had a person ask me to share the spreadsheet. And I don't think I'm going to this month. I might share it next month, but I'm going to be honest and tell you I don't want. They wanted the QQQY spreadsheet specifically. If they wanted the IWMY one, maybe I would have given it to them. But the QQQY one, I've had no ends of trouble on, and I have so much stuff that's jacked up on this. I got so frustrated, and I try not to watch Retire on Dividends videos to cheat off him to see his numbers, but I just had to because I was just having so much trouble. So I watched him a few days ago. Like 2 days ago, and I was off by 1.9 million. So what do? I try to find it, and I spend all night trying to find it, or not all night, but I spend a long time trying to find it. I can't find it. I think I know what happened, but I just guessing it's going to make it worse. So I'm like, holy cow. I want you guys to have good information. Right now, I think he's the best information on the internet. I'm convinced that my daily profit boxes and these numbers right here on a daily basis, they're good. Something's messed up in the logic or something. I stand by my profit boxes, and these are good and on a daily basis. But I just wouldn't want anyone to make any kind of decision based on this, and I'm going to show you why. Because I did the ultimate thing you're never supposed to do. What I did is I added a dummy line, and I made it where you can't see it. I'm sure people have noticed it. You guys notice everything. I hid the row. But anyway, I put the difference between what he had and what I have, because I'm pretty sure he's right. That guy is sharp as a tack. So I put a dummy row and I just added in his number. Okay, so that's the bad news. That's my confession. I'm sorry I did that. Now I can't figure out how to get the dummy row back. Well, anyway, all right. Gosh darn it. Okay. So row number 6 is a dummy row. And so a nice person emailed me and asked for my spreadsheet. I feel like a jerk, but I mean, if I gave this to somebody and they started looking around and they saw this row number 6, I mean, that's not cool. This is probably how people steal money from companies and stuff and embezzle. Maybe they make hidden formulas and stuff and hidden rows. But anyway, obviously that's not what I'm trying to do. This is a learning process, but this spreadsheet, especially the QQQY, has just been kicking my butt this month. I have my method down, and next month's going to be a lot better. And if I had a subscriber say there was a spreadsheet expert and said, hey, give me that spreadsheet, I'm going to fix your formulas for you, and I'm going to give it back to you, and and it was somebody I trusted, yeah, then I would probably share it, because I'm not doubting that I need some help. So we'll see. Maybe I just need to talk with this person and see what he wants to do with it. It's probably the nicest guy in the world, and there's nothing bad about it. But at the same time, I don't want to give this spreadsheet out to the world with all these inaccuracies on it and have someone lose money or someone, something. So I just want to be out front and say that this spreadsheet is messed up. Here's what I'm also going to say. When I go to make my calculation on the dividend here in a few days, of course, no one's going to take mine seriously. Everyone's going to listen to Retire on Dividends. But just for fun, I'm going to make my own calculation. And I'm going to make the calculation. I'm going to take that cheating number out of it. And I'll make a calculation based on what I would have had. And we'll see what that was. And then I'll make a guesstimate based on with the 1,000,009 added back in. And we'll see which one's closer. And I bet you the second one with the 1,000,009 added back in is closer. So the spreadsheet, as far as the tallies and stuff go, to me, that's just for fun, and I'm learning this month. But the profit boxes themselves are solid. I stand by all these, because this is simple. You know, how many options you sell, that doesn't even matter in the profit boxes. You have a strike price, and you have a price you got for the option, so that gives you a break even. And, you know, it's real easy to do, and people love them. So, like I say, I'm not saying the spreadsheets are no good, but when you go much beyond the profit boxes, I don't have a lot of confidence in them. All right, well, I like to be honest. I hope everyone, I might lose some subscribers, but I think people have probably figured out by now that I'm a big picture guy, and I'm better at talking than I am at doing stuff. All right, I'm going to improve, though. I will say this, my IWMY spreadsheet, no one else is doing that, so I don't have anyone to cheat off of on that one. And I went back and I looked at these numbers, and I think they're solid. And I'm betting you I can make a pretty damn good estimate on this one. So we'll see. So it's not like they're all messed up. The IWMY spreadsheet I'm very proud of. I've done a great job on that. JEPI spreadsheet too. Okay, let's talk about tomorrow real quick. So we know the market's going to, right now is a little bit flat. I'll try to do this. Well, I want to get one other thing off my chest with the QQQY spreadsheet. I had another subscriber notice this. You guys notice everything. Like I say, you guys are sharp as tacks, but somebody noticed this big negative intrinsic number right there on the 18th. Also, they didn't notice it, but if you notice, I have two entries here on the 18th, and I usually consolidate my entries I consolidate the lines to 1 day. In other words, if they sell two options, I take the average and figure out what it was. That 18th was last Thursday. Last Thursday was a huge cluster because on Thursday, any options you write on Thursday expire Friday morning at the open. So I think that happened to one of my options. But then what else happened on Thursday is they also wrote an option at the same time for the 20th. They wrote it for 2 days away because there's no afternoon expiration. But then what they did, and they got a lot of money for the 2-day option. They got $77 for it or $97 for it. One of these big ones was the 2-day option. Then what they did is they, midway through the day on Friday, they took one of those, they covered the option to realize some of the gain, and then they sold a new option. That's when I watched Retire on Dividends video to try to figure out what the heck. And to be honest, he didn't know what the heck either. That was one of the most confusing days ever. Next month, I'm not going to get caught on surprise. That only happens, the AM expiration only happens the third Friday of the month. By next time, I will have that down pat, and that won't be a problem. But where that goes back to intrinsic and extrinsic. So when they sell an option in the middle of the day, I've always said that I'm not big on the intrinsic and stuff, but the main reason is it's not like it's not important. The main thing is they don't tell us what the price of the index was at the time they sold the put. They sell them towards the end of the day, so Retire on Dividends and myself just use the closing price to figure the intrinsic and extrinsic. I have the closing price in this column here, and the intrinsic and extrinsic. Intrinsic is in the money amount, and so, for instance, on this one, that they sold the 16,575 option, I looked at the close from the night before. It was 16,623. Well, this is a bad example because this is where it was screwed up. Let's look at a normal. Let's look at a normal one. Okay, on the 13th, they sold the 16,380, right? All right, so they sold the 16,380. The day before, the market closed. The night before, the market closed at 16,354. So they sold an option that's in the money, the difference between 80 and 54. And that difference right there goes to the intrinsic line. And then the rest of the option, whatever else the option was in the option premium, is extrinsic. Like I say, intrinsic and extrinsic are important, but these numbers we're coming up with, if they sell it at 245 versus 3 and the market moved 5 points or 10 points, these numbers can be wrong by quite a bit. And sometimes you'll see, like just the other day, they sold an option. Let me show you this. I guarantee you this is what happened on this one. All right. Yes. All right. SPX. They sold this option and they got hella intrinsic, and they barely got any extrinsic. I couldn't believe how little it was. Here's what I think. That was the day the market was slipping. 2 days ago, the market was falling through the floor. They probably sold. I bet they sold it. Usually, it's about half and half. On most days, it's about half and half. I bet you anything they sold this a little bit earlier, and I'm just taking the close price, and so that's why I didn't end up with any extrinsic. So I think these numbers are worth tracking, but I think they're of questionable value. Here's what I want them to do. I don't know why they don't make their accounting public. I mean, their defiance, their power to the people. If I ever get Jay on a podcast, that's the first thing I'm going to ask him. Or I'm going to ask him for a job. I'd come out of retirement to work for Jay. But the second thing I'm going to ask him is make it public. Make it open source. Give us they have all that information. It'd be nothing for them to publish that. I think that'd be great. And then they could say they're the most transparent ETF. Maybe there's reasons that I don't understand that have to do with the SEC and compliance and regulations where they won't do that. But I bet you that even if they say that, I bet you that's kind of an excuse. So anyway, that's my speech on intrinsic and extrinsic. Let's talk about tomorrow's contracts. All right, the QQQY, they trade NDX options. For tomorrow, they sold 164 at the strike price 16,810. They got $90. It's a pretty good premium. They're going for $1.4 million. They got $1.5 million today. They made $1.5 million today. That was the record capture. If you didn't see my end of the day update, we'll make that green. Anyway, they're going for $1.4 million. So whoopee, let's go. I could show you the profit box. We'll look at the profit boxes in a second. Okay, let's talk about IWMY. This is something else. These guys actually yesterday, they covered their option early. People always ask me, do they ever cover it early? Well, they did yesterday. And let's look at the chart yesterday, and I don't know why they did, but maybe they knew something we didn't. RUT, gosh darn it. All right, RUT. Okay, so for some reason they bought the option back when it expired well out of the money. Or wait, let me think about this. I don't script these out. So this was today's action. So they sold it yesterday. Oh my gosh, okay. They did cut off some of their downside yesterday, if I'm reading that right. And people were asking me, it'd be great if they got out of it early. No, because the day they lost a bunch was the day before. Yeah, that's what it was. Okay, now they had to pay $47 to cover it the day before, so they didn't. So I guess, well, now I'm confusing myself. Anyway, let's look at this. So they did not get. I came on at the end of the close today. That's right. This was the day they did this. I'm sorry. Gosh darn it. Today they closed it out a little early. So back to the spreadsheet, and they really didn't need to because it went up. Maybe they thought it was going to dip back down in the profit box or something. Maybe when it was in the profit box, it was only worth $4, and they thought, we'll go ahead and we'll sell it. So what happened to us yesterday doesn't happen to us today. Anyway, I thought that was interesting. So we did not achieve full profit today, and I reported that we did at the end of the day. They usually just let them expire. So if it's way out of the money, I just always report it's a full profit. But from now on, when I come on at night, I'll start cleaning that up. The good news is the SPX, which is JEPY, and the NDX, which is QQQY, they just let theirs expire. So we had full winners on those two, and we had a partial winner on IWMY. For tomorrow, they sold 299 at the 2,000 level. They got $26. Is that right? No, I haven't done this one yet. That's right. I was going to do this one. I was going to do this one with you guys because I thought you guys might want to see how to do this. See what I have to go through to do this. This is where I need help on my spreadsheet. Okay, the first thing I have to do is this number right here that says index closed current references this number, which pulls the current price from Google Sheets. But I don't need I want the current price during the day, but then after the day's closed, I don't want that to because then this number will start changing tomorrow when the market opens up again. So the first thing I have to do, and this makes me mad, I wish there's some way around this. I have to just type in the number, 17.06. I know this is all automatable. I need to learn Python, or I need one of my subscribers that knows Python to write me some scripts. All right, so that's the first thing I have to do. I have to write that to make it a real number, or else if I forget to do that, then it's going to mess up the intrinsic and extrinsic numbers tomorrow when the market opens. These numbers will be moving all around. That's happened to me before. So that's the first thing I have to do where it's not totally automated. The second thing I have to do is I have to go to the Defiance website, and I have to look at this number. I have to look at the shares outstanding, because that changes every day, and so does the net assets, or assets under management. So I have to, there's no way to copy and paste that I found. I tried to query Google Sheets for the net asset value and the shares outstanding, but it came back error. So, or not Google Sheets, Google Finance. So if anyone knows how to do that, I'm taking suggestions. But anyway, so the next thing I do is I go down and I write those two numbers. I write those two numbers right there, because you need those numbers to figure out the capture and the earnings per share. Okay, then the third thing I do, and this is another thing that, I mean, I don't know if there's a way to automate this, but then invariably they don't ever just do their options in one trade. You look at the intraday trades and you look at their spreadsheet. Okay, this shows you the BC means buy to close. That is that closing transaction. I took the average price and I put the average price on the spreadsheet so I could make it on one line. But so anyway, so that's already on the spreadsheet. But these SS means sell to open. So sell to open. So what I do is I highlight these numbers. I know there's a better way to do this. I know there's a better way to do this. And then what I do is I just go down here and I copy the numbers so I can see them. But then I go right, they got 153 for 15.02. And then they got right here 150 at 15.10. I used to just estimate these, but now I have so many people. I used to just basically do these for the sake of the profit boxes. And I would just, and I could get pretty close in my head. That's going to be like 1506 or something. It's not a huge deal. But anyway, so now what I do is I multiply this out, and then I multiply this out, and then I add these, so you get the total. So, and then you have to divide by the, well, then I have to add the number of shares. So I could do that in my head, of course, but then I take this number. Yeah, that's fine. Boom, 1506. All right, so we have 303 at 1506. So then I go 303, $15.06. All right, and then I have to look here for the strike. So it's 202.2025. It is cool. They moved it up. They moved up 25 points. I mean, that it's good when this number's moving up every day. The strike number's moving up every day because it means you're in a bull market. I like bull markets. I'm a perma bull. All right, so we got that. And so then it's somewhat automated. Then I can just take these numbers right here, drag them down. So let's just, since I got you guys, we'll talk about this a little bit. All right. Let's look at this intrinsic and extrinsic, just as an example. I was saying I didn't like that we don't really know if the numbers are good, but I do like the theory of intrinsic and extrinsic. Okay, so they wrote the 2025 strike put. The index closed today at 2017.06. That's that number I just had to go switch, so it went live update on me. So the difference between those two numbers is $7.94. So that's your intrinsic. And like I say, it's maybe not be your intrinsic, but it's somewhere close to your intrinsic, hopefully. All right, so I don't have to drag that number down. So then all you got to do is I go over to here to these four numbers, drag this down, and then I have to make this one where it doesn't have a color yet. Okay, boom. And then what I do is I erase this junk. All right, and then what I do is I come on and give you guys the report. But prior to giving you the report every day, I have to do that on all three of these. And it's no big deal, but I want to get better and more efficient at doing it. And I'm sure there's better ways to do that. So if there's anyone with any suggestions out there, I am all ears. I will say a shout out to one of my good friends in Discord. His name's Echo Eversky. He sent me a video that it's a 30-minute video, and it shows you how to set up your own, you know, watch list, your own financial stock watch list, and you know, but how to program it yourself into a spreadsheet. And it's like a college level course in finance, spreadsheet finance, and it's 30 minutes. And I watched a few minutes of it the other night, and I'm going to sit down over Christmas and I'm going to learn how to do that. And if I learn how to do this and construct this, they have a very complicated spreadsheet, and it'll answer all these questions. So I will do that. And thank you, Echo Eversky, for sharing that with me. I think maybe he realized I was struggling and needed to see that video. All right, so on to this one. These guys sold 303 at the 2025 level. That makes the break even 2,000. And so they're going for 456,000, which is a 0.90 basis point capture. So, you know, with these guys, that's not, it's one of their bigger ones, but it's not, it wouldn't be too far out of the norm. They earned 97 basis points that day. They earned $1.25 basis points that day. Lost $1.78 2 days ago. Anyway, so it'd be 91/100%, or you can look at it 19 cents per share. Let's go up here and look at these. Here's the other thing I have to do on these. I know there's an easier way to do this. On this average daily capture, I have to make sure it's gone down far enough. This goes down one more every day. So yesterday I just did the average to row 21, but now we have row 22 completed. So every day, and I know there's probably a better way to do this, probably a logic formula I could write. I have to change that to 22. So then that makes the capture, and that switch that number a little bit. Then the bottom number switches automatically. So now we're working at about 110% clip. Let's look at JEPI and make sure I did that. Make sure that one's right. No, this one needs to go through 21. See, I have an extra row in my freaking QQQY spreadsheet because I cheated. All right, so that one we're on that's not very good. We're just on a 36% yield right now. That bad day really knocked the JEPI down. But hopefully if we get, okay, see, I already got a problem with this. What the heck is that doing on capture? You've got to be kidding me. We're trying to capture 376,000, and there's no way it's 3%. There's no way it's 3% of, there's no way it's that big of a capture. So K divided by N, so that number divided by N, I mean, that should be right. Okay, I don't know. I'm gonna look into that. We'll get back in the morning on that one. All right, I just want to make sure that I cleaned up everything. I guess the only question on my plate is to figure out what's going on with that JEPY capture, because I don't think they really earn 3%. I'm sure that's a mess up of some type. So I'll have that number corrected by the morning. Anyway, I hope this video wasn't too boring for you guys. I think there's some people that probably like to get into the nitty-gritty details, and I'm hoping they're the ones that are watching, and maybe they'll have some suggestions. All right, guys. It's been fun. You guys have a great night. I'm not even gonna edit this. I'm just gonna put it up on the internet. Most people probably won't see this till the morning, but I'll get on at 8:30 as soon as the market opens, and we'll look at futures, and we'll look at how the futures did overnight, and then we'll look at the market open in New York, and we'll see how we're doing at that time. And I will have an answer on the JEPY, because I'm pretty sure we aren't going to capture 3%. It would be wonderful, but I'm thinking that's a mess up. All right, guys. Thank you so much, and you guys have a great evening.